Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the open. Coming up, US stocks in focus and indicated lower amid interest rate concerns. And that's our word that seems to be creeping back in: recession. Costco, we're waiting on the results. The retailer's earnings will be on deck, and the question will be if the retailer managed to gain market share amid tough market conditions. And Cisco's Splunk deal, will it prompt a software deal frenzy? We're watching out for names like Datadog, CrowdStrike, and Dynatrace. Some investment bankers and also analysts saying that they look like attractive targets. Good afternoon. I'm Angeline Ong, and welcome to this brand new edition of Beat the Street. Not long now before Wall Street starts trading. This is how the equity markets are looking as we count down to lots of different things in the mix. Costco, as I mentioned earlier, concerns about a recession, and also the elevated US Treasury yields and concerns surrounding a partial shutdown of the US government. According to ratings agency Moody's, this is likely to be a credit negative. But we've been here before many times, and there's always a last-minute fix to the situation. Just taking a look at the US Tech 100 for you as well, because after a slightly hopeful start to September, it has, like the other indices, slipped lower. On the NASDAQ, declining issues outnumbered advances by a 1.1 to 1 ratio. The NASDAQ has recorded 45 new highs and 426 new lows. Just showing you the daily picture here for you, as you can see there. If volumes hold, then we could see it potentially slip further. But we are counting down to the next earnings season now as well. And also, here's a look at the US 500, a similar picture there. About 9.1 billion shares changed hands on Wall Street compared with the 10 billion daily average over the last 20 sessions. I just wanted to add that the other thing that investors are digesting is the commentary coming from the Fed as well. We had Neil Kashkari, this is the Minneapolis Fed president, saying and noting the need for raising borrowing costs to tame inflation in light of a surprisingly resilient economy. Chicago Fed Chief Austin Goolsbee, in an interview, said inflation above 2%, its 2% target, remains a greater risk than the scope of a slowing economy. So worrying comments there. We also earlier had some news out of the US housing sector, not just this minute, but a while ago. Building permits expected for August 1.54 million, and it came in almost bang in line with expectations. The key one to look out for will be slightly later in the session, and that is the consumer confidence details. Now, investors throughout the week will be monitoring data, including durable goods, the personal consumption expenditures price index, and also second quarter GDP, along with more comments from Fed policymakers, including Jerome Powell himself. Ahead of that, IG's Axel Rudolph has been looking at the Dow Industrials.
I believe the Dow Jones Industrial Average is really interesting because it has fallen for 7 consecutive days now, but has reached the 200-day simple moving average here at 33,823, which held yesterday. And therefore, I wouldn't be surprised if at least short term we could see a minor bounce off that moving average, which is now support, perhaps take us back up towards the late August low at 34,025 on the Dow Jones Industrial Average. But even if we were to see a bigger bounce, provided we stay below the previous uptrend line, which actually goes back, as you can see here, to the low seen back in March of this year, which now, because of inverse polarity, acts as a resistance line, and that can be seen around the 34,540 area or so. As long as we stay below there, the odds are really pointing towards further downside being seen, even if short term we might see a bounce over the next few days. So if we were to fall through this 33,776 low, which we made earlier this morning in the overnight session, then the key support area to watch out for is the late June to July lows between 33,610 and 605. Because if we were to fall through there, then there's nothing stopping us falling all the way back down again towards the May low around 32,585.
Thanks so much, Axel. Meanwhile, the countdown to the holiday shopping season has started, and retailers, especially in focus as we count down to results from Costco. IG's Jeremy Naylor is with me now. Jerry, what are you expecting to hear?
Well, we got these numbers out after the closing bell this evening. It's 1:15 p.m. Pacific time, which leads us about 15 minutes after the close of Wall Street this evening. They're fiscal fourth quarter numbers, and it has to be said before we get underway in terms of what we're expecting. This is not an all-session stock, so we won't be able to trade it directly, but we'll get a feeling for what's likely to happen and what it could also mean for some of the other retailers that are listed all sessions on the IG platform. We're expecting this number to rise by 13% to $4.79 per share in the fourth quarter. Revenue amongst analysts expected to rise by about 7.8%, $77.75 billion. A solid performance considering the current climate and the fact that a year ago Costco posted a 15% revenue increase. I want to show you the share price chart because this is really fascinating. And Axel was just talking about some of the dynamics from the technical side in terms of some of the indices. I want to take a look at the technicals on this in just a minute because I've drawn this symmetrical triangle pattern here, which is beginning to resolve. And I think technically speaking, this looks potentially positive. And Oppenheimer agrees with me. The brokerage maintains its top pick ranking on the stock. It says management has demonstrated a track record of driving healthy levels of grocery growth, even in a low inflationary and in some areas a deflationary backdrop. It says a potential membership fee. And of course, if you want to shop at Costco, you've got to become a member. There's a potential fee hike coming, and a special dividend could also represent potential positive catalysts down the road for Costco. Looking at this share price chart, we've got 27 to 39 brokerages rate the stock a buy or higher, 11 hold, 1 sell. And the median price is $555. Now, that is below where we are at $558.65. This is a level according to Refinitiv. Now, technically, what I want to talk about here is this level of resistance that we have yet to get through. Now, just a week or so ago, 26th of July to be fair, it topped out at $571.01. Now, since then, it's been finding it difficult to get past there. If you take this pattern here that I've drawn, this symmetrical triangle, you measure the height of the point at which it touched both resistance and support. And that was this blue dotted line here. And I projected that on the upside here because when you get a symmetrical triangle, it can break up either up or down, equal weighted. It's broken up. So technically speaking, this should resolve with a share price taking us back to the 22nd of April, all the way up at $589. Now, that is a little bit away from where we are. Technically, going into these numbers tonight, you should be long. Your stop would be below recent price action. So I'd put your stop at around about the $552 level. With a trade at 558.65. We're opening it in about 50 minutes time. None of today's trade will be in any knowledge at all of the results. But if we do get a positive swing to this, as Oppenheimer claims, and we get a positive outlook, we should get a candle close beyond here. And then we're on the way to these highs here, which will then take us back to these levels at $580 odd a share, which will then mean that we've got that completion of that symmetrical triangle technically. But it's all to play for on the fundamentals after the close this evening, when we get those results on fiscal fourth quarter numbers from Costco. Angie, back to you.
Thanks very much, Jerry. We'll keep a close eye when those numbers break. Another stock that is all sessions that gives our clients a lot of volatility is Tesla. This is an all sessions, as I mentioned earlier, also showing us really interesting technicals. But what is perhaps more interesting is what's happening externally. And it ties in with all that weird and rather worrying mood music from China recently. It's not just about the economy, but I'm sure you've heard about the news to do with the Nomura banker. Still, according to sources, we're still trying to get some confirmation on that, whether he's been told he cannot leave mainland. The tit for tat between US and China continues. The news on China saying that its government workers should not be using iPhones for work. And now Tesla is reportedly set to face EU anti-subsidy probes over its China exports. So this is still an FT story. It has not yet been confirmed elsewhere, but we are keeping a close eye on this because it can have ramifications for not just Tesla, but also other car makers that export from China to the European Union. And if they're under investigation too, well, it could be a really messy affair. So just keeping an eye on Tesla's chart there and looking at a closer view, we are from the hourly vantage point, we're seeing just not much of a reaction down, about 0.2% so far. The other thing that's been making headlines recently, the strike action that we're seeing, not just across the US, but also across the globe. This time, it's the video game voice actors and motion capture performers that have voted for a strike, to authorize a strike if talks on new labor contracts fail. This could potentially be the stage for another work stoppage in Hollywood. The issue is not just about pay and conditions, but also the fact that there are concerns that AI will mean that many of these actors will not be covered and protected, and also they'll not be paid for simultaneous work if it's reused later on via AI. Of course, there's all the infringement of reuse of original work as well. So the story has got legs. Just want to tell you that we are keeping a close eye on this. Ashley Birch, you may be familiar with this video game voice actor, says it's an inflection point for the industry, in particular with AI, because right now there aren't any protections for actors and those that work within this space. Meanwhile, related to the strike, I just want to show you Vivendum as well, because Vivendum, although it's not an all-session stock, it slumped after the film set supplier said it was expecting the second half to be weak due to the impact from the recent writers and actors strike across Hollywood. Now, this company, if you don't know Vivendum very well, they make everything from camera support, provide camera support and monitors, to backgrounds, backdrops, to film production companies. Its earnings were also something to behold, because it was a 53% fall in adjusted operating profit to 15.2 million pounds. That's 18.5 million US dollars for the 6 months to June. And staying with the topic of strikes, we're still watching UAW, For You Like a Hawk, and also Ford Stellantis, and GM, the three that are involved in the strike action. UAW says that contract talks are currently very active with Ford. There's not much new from that, no deal yet. And UAW is calling Ford's decision to pause its battery plant in Michigan, the construction of this plant rather, a shameful, barely veiled threat by Ford to cut jobs. And last but not least, the M&A action, the IPO action we've seen recently has now given birth to speculation and talks that perhaps we could see Cisco Systems' $28 billion deal for Splunk likely to prompt other tech giants to splash out on similar deals across the sector. Of course, this is a space that is closely watched by many investment banks, because all this means is a load of fees for them, and this would be coming in at a good time when many of these companies are seeking other sources of high revenue after high net interest income in the first half. The tech targets that are spoken of, Elastic, Datadog, CrowdStrike, Dynatrace, many of them are looking attractive, say bankers and analysts, and the potential tech acquirers include Microsoft, Adobe, and Oracle, although neither of them have said anything so far. Now, before we go, here's a last look at how the market is looking. It's still looking very quiet, very somber out there as we count down to the open. It has to be said, though, that with so many things that we're waiting on this week, we won't see much of a position by investors, potentially after we hear from JP himself later on. And we're also waiting on those data points, including US consumer confidence and that PCE data. Well, that's it for this edition of Beat the Street, the show that follows all the trading action for you, helping you position yourself ahead of the opening bell. I'm Angeline Ong, and for further analysis, do check in at IGCom and at Angeline Ong on Twitter. This is IGTV.